Hello, everybody. I am thrilled to welcome you to my inaugural broadcast. Thanks for tuning in. So I'm going to run through some things, about the market, my outlook, how we look at things. And since it's, March 14th, pretty important point in the market currently, 2025, I'll update, my forecast outlook and where we've been, and then give a little preview of what's coming up. We got the, luck of the Irish helping us out here on Friday. The Ides of March, things are bouncing. And then I'm going to finish up with, it'll be my honor to interview Larry Williams, one of my old friends and mentors, who's, just honored us with his presence on the first broadcast. So it's perfect. So, I put out a forecast in 20, the end of the year, right around December 19th. Was a little bullish, base case scenario, about 65% probability. We thought that the bull market could, tack on average gains about 8 to 12% with pullbacks in Q1, Q3. We are getting that pullback in Q1, very typical post-election year, choppy trading. As Wall Street navigates Washington and the Fed and try to balance, the inflationary forces, and then, the best case scenario was the Trump administration just hits it out of the park with very few missteps. Inflation, is contained, doesn't overheat, geopolitics cools, and we get a little bit of higher returns of about 12 to 20%. Then the worst case scenario, which has the odds have increased with what we've seen in the charts of the markets. Post-election years have been a lot better in recent years. And I'll show you a couple of charts, in a second. But before 85, post-election years were rough, especially for Republican administrations. And, they come in and try to take care of things very quickly. We've seen that happen right now this year in 2025 with President Trump 2.0, like never before, at least as far as I can remember. Maybe Larry will remember something from before my time, but pretty much old school weak Republican post-election performance is on the table now. Refers to page 28 in the Stock Traders Almanac 2025. So basically, perhaps a little too much drastic, too many drastic measures. People are worried, uncertainty, et cetera, so forth. So let me see if I could just pull up a nice little chart for you guys here. This is the post-election year seasonal patterns, right out of the outlook in the 2025 Almanac that I wrote last June. We've got all post-election years in black, 5th years of the presidency in pink. That would be a second-term president. The blue line is the aggregate cycle. I think that's going to be similar to Larry's natural cycle. We'll talk about that during the interview, where it combines the 4-year cycle year as well as the 5th year of the decade and all years since 1949, which was the first full 4-year cycle since World War II. And then 2025 in this brownish colored line. Maybe the laser pointer will help us out here. You see, incumbent party losses the years after the party power changed hands in red, and the green is incumbent party wins. So here we've blown through that level, bringing our worst case scenario into play a little bit. Took a couple of looks from page 28 that I referenced here. This post-election. You can see some of these difficult years: 57, 69, 73, Eisenhower, Cold War recession, Nixon, Vietnam recession, 73, Vietnam, oil embargo recession. And then the real, stronger post-election years in since 85. But just, not that it's all about Republicans, taking it on the chin there. Democrats have a difficult time in the midterm years. So we took those years from Republican administrations, and I plotted them out here. We've got the blue line is the scary one with the all those administrations before 85, 53 to 81, and then all Republican administrations since 1950. If we can recover and get back up into here, we can have, a less weak year. I know everyone's cheering today with the big bounce, but, let's not go crazy. We need to see some more confirmation here. And then I took this 2-year look, which it's kind of interesting. I took those three worst year combinations where 68 was very similar to 24 with a sitting Democrat bowing out, convention in Chicago, and some, geopolitical and economic issues. So we've got the 2-year pattern here. Red is 56, 57. Green is the 68, 69. And of course, the beginning of the last secular, one of the last secular bear markets there, the previous secular bear market from 73 to 74. And that pink line is where we are right now. That's it should be as of today's close, a little bit of up there. So this pattern has me concerned, considering what happened in 73. I'm not convinced that all hope is lost, but we'll need to see some proof. So then, let's just dial in here to the present. March Madness here happens. I was commenting to somebody out on the trail that the weather was very volatile, and jokingly like the market as well. So this end of first quarter, we see this March volatility, and I posted this the other day out on the blog and Twitter sphere and all the social media that we could be setting up for this Ides of March bounce. In the recent 21 years on the solid line, we've seen the beginning of March quite weak and then bounce at the end of March. That doesn't preclude us from having some further weakness towards the end of the month, triple witching, if you want, or quadruple witching, as people refer to it now. With all the options expiring and futures expiring there the third week, taking some end of mean quarter hits. And this brings me to the technical, aspect of things. I mean, we look at seasonality, of course, as the producers of the Stock Traders Almanac. Fundamentals, we've got some issues with GDP, inflation's waffling back and forth. I think perhaps the Trump administration is sort of sandbagging the Fed a little bit and trying to flush out some more cuts, sooner and more, and deeper. And then, sentiment. One of my favorite sentiment indicators, not shown here. Maybe we can throw that in there, is the investors' intelligence, which tracks people like myself who actually get paid for their advice instead of some survey of people who just say what they're thinking. And that went negative with more bears than bulls for the first time since I think it was September 22. And yes, that's contrary indicator is encouraging, but it's usually not the end of the downdraft when you have that first negative shift to bearishness. So and just a little look here at some of the weaker post-election year performance in March. So technically, I hope I don't have too many lines on here, but this is yesterday's close. This latest trend line that I drew here from the intraday lows of last April, the one negative month of 2024, to that August low, draws us out to what, just under 5,500. We haven't quite tested that there. And then this 5390 level I had put out here, this is from the webinar I hold with subscribers, that these lines have been there for a while. This is right at that September low, runs through a couple of gaps. It just seemed like an area. I think Katie Stockton threw that number out too, and she's a pretty solid technician and a good friend as well. But what we were concerned about, and you've seen this 57.75 number out there and on the screens in public. This is the election gap. The close of election day, the gap up the next day, breaking through that, and the 50-day and the 200-day is this blue line here, and then this other 56.70 line was the old July peak, the old midsummer Christmas in July peak that we had there. We broke that, and I think that gives us, there's sort of a no man's land here, open gap. Yeah, we bounced today. Let's see if we can follow through on that. But with that, I think I'm gonna take a pause here, and then we'll get into looking at what's going on next week real briefly with St. Patrick's Day and triple witching, and then we'll jump in and chat with Larry. So stick around, we'll be right back.
Hi, Hi everyone, I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello.
All right, everybody, welcome back. St. Patrick's Day is Monday, one of the only cultural events, or the only cultural event in March. Used to be that it wasn't such a great day because everybody was all banged up on Fifth Avenue and not trading, but that's changed a little bit. So I'm going to show you a little, just a quick little table here of St. Patrick's Day, and perhaps this has come a little bit early with the bounce on Friday here. So we've seen St. Patrick's Day be a bit more bullish in the last 31 years, up, should be 23 of 31 times. Monday, St. Patrick's Day, not so great. And again, we've got an old Friday, Monday, down Monday indicator. We had a big up Friday, but, news can change over the weekend. We'll see how much confidence traders and investors have on Monday. If they do, that will be encouraging. But for now, perhaps the luck of the Irish and the Ides of March, as I mentioned earlier, can stem the tide of this downdraft here. Not convinced it's over yet, but just a quick look, and then we'll bring Larry on and have a nice little chat of our March strategy calendar. You can just see, we had some decent inflation numbers. It's not quite a trend yet, but encouraged by some of those. The PCE was tamer last week, and CPI was okay this week. So it wasn't something that that it's going to upset everyone. But this triple witching week is taking some big hits, some fluctuations in both directions in 2020. And, this does feel a little bit like 2020. Somebody sent me a picture of the Costco egg aisle that was empty, reminiscent of toilet paper. Now, my friend Larry had a great line from the pandemic. I'll quote him ahead of time. When people start buying when people buy toilet paper, I sell stocks. Is that what it was? I'll check in a second. So we've got the FOMC next week. That'll be important. Nobody's expecting a cut from them. And I think it's going to hold still, but a lot of important indicators are coming in. And then the week after triple witching, end of quarter, takes some mean hits. So with that, let's just jump in and bring my friend in. I'm going to stop sharing here. And Larry, did I get that quote right?
When they start buying toilet paper, I start buying stocks. If they have that much fear in the street, is probably pretty close to a market low point.
So before we talk, yeah, exactly. So Larry began his career in '62 with the stock market crash that year. Then he authored some of the best-selling futures trading books of all time. How I Made $1 Million Trading Commodities last year. He's received every major live trading award in the industry: Futures Magazine, Traders Expo, Market Technicians, the IFTA, the International Federation of Technical Analysis, Traders International. Best known for winning the Robbins Club World Cup Trading Championship, trading 10,000 to 1.1 million. Most every year, his students have also won the championship, and it's no wonder that Jim Cramer on Mad Money, which I love seeing you quoted there, always introduces him as the legendary Larry Williams. You're a legend in my mind. For me, it's an honor to have one of my old friends and mentors as my first guest. Larry and I go way back. I've known him pretty much my whole life. I was born in '66. He started trading in '62. The Almanac's been around since '68. My father, Yale, went out on his own in '66. Yale Hirsch, he created the Almanac after a 5-year run at the famed Indicator Digest. Long story there. We won't get into it. Yale, if anyone doesn't know, passed away in 2021 at the ripe old age of 98. One of my best memories of Larry when I was about 12, was it like 46 or 47 years ago? We went out to Montana one summer, me and the folks, and you taught me how to catch a big, juicy rainbow trout. we cooked it up. We were in your little boat on the lake, and I don't know. I always refer to your stuff. So tell me, my friend, how did you and Dad originally get connected, and a little bit about the relationship there? I know it was productive and close.
Well, it just began because back then I think people communicated through mail, and your dad was as much of a mentor to me, I think, as maybe I've been to you or anybody else. Yale certainly, as you well know, did some groundbreaking research, and like, wow, that's really interesting stuff. About the same time that I was started looking into seasonals and commodities. We'd looked at seasonal and stock before. Your dad did that, but nobody looked at it in futures. And I think that kind of kicked me into that. But I remember when you came to Montana, you were just a little kid, and your dad had this wild idea, said, look, Williams, I'm going to give you some money. I want you to trade it and trade real time and see how you do. Let's see if you can do this. Because Yale did actually gave money to people to trade to see could they walk their talk or not.
Right.
And we did that, and I traded. I forget the result, but we made some decent money for him. And I think that got his attention. Most people back then didn't want to really trade real money. They want to just talk about it instead. And I've learned so much from your dad and from you. I mean, I look at your stuff. Oh yeah, I like St. Patrick's Day. I never looked at St. Patrick's Day before. So I just saw the clip. I guess I would have looked at St. Patrick's Day, which is, by the way, is the biggest holiday in the Virgin Islands. It's really
Is it really?
Oh yeah, it's a huge, the big holiday of St. Patrick's Day.
Bigger than Juve or
bigger. It's the biggest one we have. Absolutely.
Wow.
Yeah.
So amazing, just hearing about the trade. And so let's talk a little bit about your process. You're one of the greatest traders to ever walk the earth. You're a master of the cycles. Tell us a little bit about your process, as a trader analysis and analyst. What is it you look at? I mean, you've got a knack that other people don't have.
Well, hopefully I do, but I really had a very important person in my life, Bill Meehan, who had been a member of the Chicago Board of Trade, and he was really big into conditions. He had a good idea that cattle or wheat would go up or down, but he had no sense of timing. So Keith Campbell, who now is the Campbell Funds in Baltimore, said, you got to go see Williams. He's pretty good at market timing. He has no clue what's going to happen in the future. So we kind of got together. I was pretty big. I could get short-term moves and timing. Bill was very much longer-term moves. And he taught me that a really important thing that markets, I can now sum it up as charts don't move markets, conditions move markets. So I first look at the conditions, but let's say like a good stock, you'd have a great stock, Tesla, but if you buy it at the wrong time, you're in a world of trouble. So you still have to have conditions in addition to timing. And that's really what I do. I look at conditions, and are we about the right time cycle, seasonals, and then the market needs to prove itself to me. It was a trend change. Like, okay, now I can hop aboard. The train's moving. Let's see where this is going to go.
Are you looking at technical indicators to time that?
I look at technical. Hey, I'll try anything.
I know you're like me, one of the few that'll combine technicals and fundamentals and not be ashamed of it.
Oh no, fundamentals, markets move from A to B because of fundamentals. They go like this because of technicals and emotions. So you need to understand both of them. So the conditions are really important to me. And if I can establish this conditions that are usually very bullish, because this is like inflation is down now, inflation is going to continue coming down now without a doubt. Inflation
is.
Oh, yeah, you can bank on that one.
How so? How can you tell?
Well, for a couple of reasons. One, it has a really strong cycle in inflation, which we called 2 years ago. Inflation would top out. It has. And think about it. Inflation is really the price of energy. That's a driver, the largest driver. So Donald Trump says, drill, baby, drill. What's that going to do? That's going to put more oil in production. The more oil that you have, like any commodity, the more of it, the lower the price will be, which I suspect, Jeff, will balance out the tariffs. If we're going to have increased costs because of tariffs, maybe inflation there, but lower energy prices, that's going to balance it out. So I'm not a real worried person about tariffs. I think they're going to create a lot of jobs. They might make some prices higher. That will be offset by crude oil.
Yeah, I know you have this fantastic forecast that I went through. It's like 100 something pages. Inflation cycle was in there. I'm not gonna lie, I didn't absorb it all. It's a lot. I'm still looking at it. But the one thing that always jumps out at me is this natural forecast, which I guess is a lot like the aggregate cycle that I pointed out, or similar to the
No,
one
not
on my
really.
chart.
No, not really. My natural cycle for I do. There's several cycles operating in the market. So there's long term, short term, very short one, intermediate term. What I tried to do is combine these into one pattern, and they're not seasonal.
Okay.
Those seasonals can be a real value because some commodities or stocks have a real strong seasonal pattern, others don't. So the pattern's there, but you're not going to rally 80% of the time from June to July or whatever it is. So
Right.
seasonals I look at in a little different way. I don't take them as an automatic, but cycles, I almost have come to the point, Jeff, that things are predetermined in the market, that we knew inflation was going to go down 2.5 years ago. I know that inflation is going to start to go up in about 18 or 24 months from now. Those things I think are just the cycle of whatever. There's a great song. Remember Bonanza? Did you ever watch Bonanza as a kid?
Yeah.
Well, Lauren,
Not the first run though.
Lauren Green, who I met, but an interesting little guy, did some songs. One of the songs he sang was about the graves of destiny, where this guy's going to go kill his wife who's been cheating on him, and is going to kill the lover, and he's going to kill himself. And he digs the graves, and he goes into town to kill
happy
him.
tune.
Yeah, real happy tune. And he decides he's not going to kill him. But a bank robber breaks out, and boom, 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 guess who gets shot? The three of those get shot. So they go back in the graves of destiny. These things are going to happen. So to me, I don't care if Joe Biden is there, Donald Trump is there, or whoever is there. These things are basically going to happen. Whoever's there may accentuate the move, but there's a time to sow, a time to reap, a time we're going to see stocks go down, and a time to see them go up.
So this natural cycle is a combination of different cycles, different time frames, and I mean I'm sure a lot of it's proprietary, but just to give us a little flavor, it's a combination of different things that are not necessarily correlated.
Right. I mean, I love one of the things I learned from your dad was a 5-year phenomenon that Edgar Lawrence Smith wrote about.
Right.
Years ending 5 years tend to be really strong, right? But that's just the same pattern, repetitive pattern. But these darn cycles come in and phase out. So I try to get when this cycle is strong and that one's weak, and kind of weave them together. So we're bringing out the strongest elements of the cycles, all in one indicator.
If somebody wanted to get a look at the natural cycle, is that something we could?
I did a YouTube video for stockcharts.com.
Okay.
We show a little bit of it on there. I just did that earlier today. And
Maybe we'll
also
throw the link in there.
A cycle forecast is in there as well. So that would be a place to go. See, I'm basically trading, want to retire. I don't want emails. I don't want people calling me.
No, I know. No.
So, yeah.
What are you? You're 80?
80. I'll be 83 this year.
Jesus, you look great. Amazing.
Thank you.
Amazing. Thank you. So let's just, with that natural cycle in our heads, let's think about, or, find out about your outlook right now for U.S. equities. Here we are, bouncing on, the Ides of March, down 6-something%. One of the worst quarters to a new presidency. Not as bad as 01 or 09 or 77, but still up there. What's your outlook? You think we're going for the bear, the recession, or is this just a correction, one of those, 10-15% corrections in a bull market?
I think that we're still in a bull market. Our forecast in the natural cycle said we should come down until the end of March. The end of March is really typical for me. My first child was born March 27th. I know that's bullish, a bullish date in the market. Usually the end of March has been good. And then right after April 15th, when people pay taxes, another boost up on the stock market. So right or wrong, I went long today's stocks, and we'll see what happens. But I think we're close enough in here to expect a resumption of the bull market. Will it be a runaway bull market like last year? No, because PE ratios are still pretty high, a little rich. But I don't think that it's the end of the world. GDP is going to continue going up. Unemployment looks pretty good. The future of America, it's still in front of us.
So my 8 to 12% out for base case forecast still on the cards?
Oh yeah, I think we'll close higher for the year than where we are now, and I'm not. Yeah, I could be wrong. I've been wrong before, and I'll be wrong in the future. But in terms of what's the best way to bet this thing, I think the best way that the odds favor a rally from here on for rest of the year. Another buy point came up a little later, I think around September maybe.
Yeah.
But this this is not
My
over.
cycles show some weakness in Q3 as well. So there's a lot going on these days. We touched on a little bit, with the year, the cycles. What do you make of Trump 2.0 presidency and what's going on? And is it all just the art of the tariff, the art of the deal, keeping everyone guessing, or what?
It's absolutely amazing, Jeff. I've never in my life seen any government slashed as much as what we've seen. Just like cut. We're going to fire these guys. Fire these. This is revolutionary.
It is. It's amazing to watch whether you're wherever you stand on what side of it. I heard a comment on I don't know if it was on one of the news things that maybe it was driving on the radio. Like if a CEO was doing this to a company, the stock would be rip roaring because they'd be cutting costs and saving things. Is that a relatively decent way to look at it? Or
Yeah, I think there's a lot of truth in that. I mean, I don't care what your politics are. I think we all agree there's been a lot of waste and fat in government. Now, are they going to throw out a lot of good babies with the bathwater? Yeah, they will, because nobody's perfect in this business. But but there's the other side of it. If you cut back all these government programs, you're going to cut back money. So we're going to have less money in circulation. The one thing I know absolutely is that the larger the deficits, the larger stock market rallies are. So my concern is if all this money just sucked out of the economy, what's going to happen to the stock market? That's a real concern for mine, because I absolutely know large deficits are very bullish for stock prices. So I don't know. There's the quandary for me. So I can rely back to my cycles, which say we're still on an uptrend until the start of 2026. Then I think we start to get in trouble for quite a while.
Another midterm bear market with an October bottom, perhaps.
Well, something like that. I mean, a long-term view would be we rally up to the first of 2026, come down until the middle of the year, have a rally, and then after that, oh, Katie, bar the door. It's going to be back to the market that your dad and I cut our teeth on from 1966 to 1982, where the market went sideways, then had a big move. I think over the next 2 years, we'll move into that big sideways market before the next explosive move to the upside. So it'll be people just bought and hold. It's going to be a different ball game for the next maybe 10, 12 years, starting somewhere in 1926, 27.
Secular bear.
2026, 2027.
Yeah,
just a sideways, just like you can have big bull markets, big bear markets, but go back and look from 1965 forward into 1982, something like that. We've seen that pattern repeatedly, Jeff, in the market.
Yeah.
So I think that's what the big, really big picture coming up is that we're through with
maybe we'll have to come back and talk about the long cycle, like my super boom forecast that.
Yeah, sure.
Remember Yale's 34.20, down 34.20. That's what that's all about. So listen, we could talk forever. I may want to do this again, but tell me, so you're going to be 83. What's the future hold for you personally? I mean, you've been doing this for 63 years, longer than I've been alive. Even before I was a gleam in Yale's eye. So are you hanging up your trading, or are you hanging up your service, or are you just gonna burn out or fade away?
Yeah, both probably. I don't do a service anymore. I will do my annual forecast report because I love trying to understand cycles in the market and predicting the future, which is an impossible thing, but we've been able to do it with some degree of ability. So and I'm still learning about that. That's a real passion. Other than that, no. What I'm trying to do, I've set the state record in my home state of Montana for the high jump, the 100-yard dash, 20-yard dash. I'm trying to get better at the high jump, and I'm getting a little better at it. Where
are you going to go fishing in Arizona?
Well, I don't know. I'll find it. There's always fish around someplace, and I'll spend some time in Montana, obviously, but I've been working a lot on senior track meets. It's pretty interesting. I beat a guy in the 100-yard dash, and he said, well, that's because I couldn't hear the gun go off. You got to jump start on me because at our age we can't hear. But that's been kind of a fun thing to do, to get back in shape and still follow the markets, but more from a distant view versus like a really got to do this boom, boom, boom. Those days are through. This gunslinger, has hung up his guns.
All right. Well, man, it's been great hanging out with you. You look great.
My pleasure.
Hopefully I'll see you soon. Thanks,
Look
Larry.
forward to it,
Appreciate you
Jeff.
coming
My
on.
pleasure. Thank you very much. Thanks, and congratulations for doing this. Way to go. Thumbs up.
Man. All right, everybody. Thanks for joining the first show. I'm Jeffrey Hirsch for WealthWise on BTT Biz Talk TV today. BTT Biz Talk Today TV. Sorry about that. It's available wherever you stream your podcasts. And if you want to know more about the Stock Traders Almanac and my services, check out stocktradersalmanac.com or Almanac Trader on your social, or just Google it, me or the Almanac. And that's it. See you next week. Happy Friday.
Buy, hold, sell, brought to you by CrossCheck Management.